Anoop is the Managing Director and CEO of THFL, Pramerica Life Insurance Company. You may be aware that THFL, Diwan Housing Finance Limited, is the second largest private home lending organization in the country. He joined DPLI in 2014 and has helped improve DPLI industry ranking in the private sector from 20th in 2014 to 8th now in 2018. So I hope in the similar record will be kept by the same. So we should be there in another 4 years to 4th position. That's my assumption. Now, he's a hands-on leader and has led transformation in business, organizational culture, and developing human capital. There is no area where he does not dirty his hand. If required, he will get into this, thick of it. He has over 30 years of experience in retail financial service sector. He has held many senior level positions, including as MD and CEO of Deutsche Postbank Home Finance Limited, Cholamandalam MS General Insurance, Royal Sundaram and Alliance Insurance Company in the health sector. He holds a graduate degree from Punjab University and also an MBA in Finance and Marketing. He's a rare individual who kept his time commitments even 40 days in advance. Let me give you the actual situation. We met in a flight on 6th of September 2016. And I must give credit to Maheshji's here. We started discussing a little bit on what we do as typically we do in any, flight where we start talking to each other, what you do, etc. So I said, I help companies align their top management. He said, can you do that? I showed Mr. Mahesh Sharma's letter that he had given a letter which was just 1 month after the introduction of TOC. He said, exactly this is what I need. When can we meet? It was 6th of September. I said, you tell me the date. I'm traveling abroad. He said, yes, I also have a board meeting. My board meeting is on 15th of October. Let's keep 17th October, 11 o'clock. Now, I noted down, but frankly, I was not sure whether it will ever happen. Because I have experienced often 40 days in advance. Bhul jate hain yaar, baat ki thi kahin. But he kept the exact timing, 17th October, 11 o'clock. We did have the meeting and we proceeded further. Another good quality about him, which I personally experienced, that he is a unique person who achieves results. Results to laane hi laane hain. Isme koi confusion nahi hai, but without compromising on values. So here is Anoop. Anoop, can we request you to come over here?
Typical Mr. Gilani, so he will go overboard whenever he describes something. Very kind words, sir. I don't deserve that. I was just doing my job and I found a sticky situation in our journey towards growth, and I realized there was a gentleman sitting next to me in the flight who could probably help me, and we decided to take it forward. I run a life insurance business and I realized that it's very, very different from normal manufacturing businesses that you might have been exposed to or you might have run yourself. And particularly for me, who had no experience in life insurance until 2014, when I stepped in, I realized that the economics, the dynamics of such a business are so complex. And I still question my team and my actuaries about how can we make it simple, how can we make it simple for the customer. But I think the construct is deliberately made complex so that it sort of creates an artificial barrier for everybody and anybody to get into this sector. We don't generate a normal return on equity. Best firms in this class, in this space, you will see, will create somewhere around a band of 20 to 25% return on equity on a going basis. But we even further complicate it. We say that it's not return on equity, it's return on embedded value. But we can talk about that later as we go into the presentation. Let me just give you a snapshot of the industry as it exists in India today, what has been the journey, and what we are as a company, and at what stage did we seek Mr. Gilani's help and how it helped us. This is what you can see is the 18-year journey of the life insurance industry in the country. Grown about 20 times in 18 years. If you remember, FY01 was the first year when life insurance or the entire insurance sector was open to private sector. Prior to that, only government companies could operate in this sector. And particularly in life, there was only one firm called Life Insurance Corporation of India. From the start of the journey, private players, the earliest ones, a set of about 6 to 7 life insurance companies who got their licenses in the first phase. They led the growth, the private sector growth. You can see at the bottom, in the first 8 years was about 192%. Small base, but 192% CAGR is a huge growth. But when you're running at such a pace, invariably you fumble, make mistakes, grow overconfident of yourselves, take regulators for granted. That is what the entire private insurance, life insurance industry did. They created complex products which were unfriendly to the customer. There was a lot of mis-selling, etc., and the regulator stepped in. So from 2008, when the new ULIP regulations came in, private players had a tough time because the products were now more oriented towards customer protection. Had to be more transparent. Insurers could not levy charge beyond a certain point. For the next 7 years or so, 5 to 7 years, the industry was degrowing, private sector, while LIC was still growing, but LIC too suffered in this process because a lot of customer confidence eroded in this space. My company started operations as DLF Pramerica. It was a joint venture between DLF and Prudential of US at that point in time, and from a very small base it grew by 47% until 2014, by which time DLF had decided to get out of insurance space because it was not a core business for them, and DHFL, which was a large housing finance company, also aspiring to get into other areas of financial services, they stepped in. And that's when I came into, and after that, we started our journey with about 35 branches, but now today we are 170 branches strong, present across the country. We will be about 145 by the end of this year. We have about 2 crore customers. We insure about 2 crore customers today, about 2,800 employees, about 15,000 agents. And in terms of some of the customer-friendly ratios or how quick we are to respond to claims, you can see that we've now reached a stage which is just below, a shade below the top, which is 97% of our claims we pay, only 3% are repudiated on account of anti-selection, non-disclosures by the customers. So this is our US shareholder, 49% they hold in the company, Prudential. They are not allowed to hold more. They would love to hold more, but law forbids them to go beyond 49. It's one of the top 10 insurers in the world, second largest in the US, ranked 48th in Fortune 500 2017, and has been in Fortune 500 for the last 25 years. It's one of the world's most admired companies, as rated by Fortune magazine, insurance segment, for 4 consecutive years. And used to be in the 80s and 90s the single largest private landowner, real estate owner in the US. They sold off a lot of assets. At that point in time, they even owned the Empire State Building. DHFL, a homegrown housing finance company, started its operations about 34 years ago in 1984 by a gentleman called Mr. Rajesh Vadhavan, who is no more now. His son, Kapil, now is the chairman of the group, with aspirations to grow the book significantly and match the market leader. He has personally stepped in to grow the company from 2001 and 2002 onwards until 2012-13, when it became the second largest housing finance company in the country. They have assets over 1 lakh crores today, and a balance sheet that sort of spans across different states, almost 400 odd branches spread across district headquarters in the country. About this joint venture, as you know, 5149, we call ourselves DPLI, DHFL, Pramerica Life Insurance. The business is very unique and segmented because in 2008, when we were licensed and we started operations in 2009, pretty much all the big players of the world had set up their base here, and they had already made their presence felt among the agent network, among corporate agents, among other distributors, and also all banks had been tied up till then. So we had a tough task ahead of us. And by the time I took over in 2014, you had a uninterested Indian shareholder not wanting to support the company through capital, etc. We had a major challenge at hand. So what was the solution in front of us? And now I would just want to sort of focus on what we did in 2014 and 15. We started to look at segments within the customer community, and we deep segmented, and we realized that there are certain segments which we can approach with a unique proposition. So one of our segments, at the side you can see Shiksha Uday. It was targeted at the parents of school-going children. So we created a product and a unique proposition around ensuring that the child will continue to have his education until end of his college should something go wrong to the earning parent if he takes a policy from us. On the other side, at the bottom right hand side, you will see Prahari. We realized that defense, 1 million soldiers and 95% of them not officers. They had protection from the government, which is the army insurance which is provided to them, but it was fairly low compared to the protection that the family would need or financial support that the family would need should the soldier die in a situation, whether war or just guarding the borders of the country. So we created a unique product for them, and we started hiring people from the defense. Defense soldiers, non-officers retire between 35, 36 years of age to 40 years of age. And these are the guys who we train. They have a trust. They never missell to their former colleagues. And we became the market leaders in 5 years' time in that segment. Today we insure about 14% of the lives in Indian Army. Based on that concept, we created another segment called Param, which similarly looks at paramilitary. In the middle, you see the Phoenix is our agent. Our agent is not just a life agent. We train him to sell a home loan, an education loan, a health insurance, auto insurance, as well as life insurance. So we give him multiple opportunities to sell so that he stays with his trade. He doesn't abandon the profession that he has taken up and do something else, because that is what typically only single life insurance agents do. They work for some time and then they realize they can't sell anymore and then they walk away. But here we gave them a customer owning and customer acquiring platform through various products, pull and push, with the hope that eventually all these agents will be able to acquire more and more customers and sell life at some point in time. Today, after 5 years, 4 years into that journey, we realize that these agents earn about 70% more than normal agents only on life insurance sales. But if you bring in the fee income that they earn from home loan sales, education loan sales, etc., it is about 130% more. So these are far more productive. Now they are well respected in their communities. So the idea was differentiate. Then we have tie-ups with 3 banks, Lakshmi Vilas Bank and Lakshmi Bank and IndusInd Bank. We sell through their platforms. These tie-ups were organized in the last 15 odd months. Then one of our shareholders is one of our biggest distributors through DHFL branches to their home loan customers. We sell to cover their loan, we sell insurance. And we, at the bottom, you see group and partnership. We have partnered with about 60 microfinance companies today, and we insure all the customers that they give loan to, thereby onboarding those 2 crore lives that you have seen on our book, which I spoke about earlier. And about a year ago, we started direct to consumer business, pure online, inviting our potential customers to buy very simple products like a dengue shield, a cancer and cardio cover, a pure online e-term policy as we call it. So a very diverse business compared to most life insurance companies, where you would, when you go and see, you will see only 3 blocks: one agent, one maybe banker if they have a bank, and one online. But we have now P&L heads who run each of these businesses as separate business line with a separate P&L. So what happened? Mr. Gilani mentioned about our meeting in the aircraft. So it was the year 2016. Was it 16? It was 16, right? I was in the middle of transforming the organization. You can see on the right hand side, we had moved from a loss of 74 crores to profit of 46 crores and then 58. And then I was thinking, what next? How do we move the company to the next level? When I met Mr. Gilani, and we realized that there was room that we could look at certain things, that this company has ability to transform itself. On those things, I had not even looked at that direction. I was just trying to, extract maximum juice with the tools that I knew. But for some of you who have been brought up in the northern part of the country, you have in the 90s or so, they had the solvent extraction plants. So these are not mechanical mills. After the mechanical mills have done their job, they take that husk and put it in a chemical solvent which extracts all the juice or oil from them. So I think it's the right analogy. We needed a solvent extraction plant because हमने जो निकालना था तब तक निकाल लिया था. That's what I thought at that point in time. And our industry ranking had moved from 22nd to number 13, but we did not know इसके बाद क्या करेंगे. So, and for some of you who know this business, there is a inverse relationship between growth and profitability in life insurance. Till the time you reach an inflection point and there is a large book to support you, which sort of churns out more revenues in terms of renewal premiums, first year premium always produces a capital strain because you almost reserve 80 to 90% of the premium that you get for the customer, plus there are onboarding expenses, distribution expenses, etc., etc. So we had to toe that or tread that very fine line balance between growth and profitability, which was the mandate given to the company by its shareholders. We had looked at various aspects of our business. We had extracted the maximum, as I just told you, and we had realized that whatever we were doing now possibly will not be able to take to the next level. So after Mr. Gilani met us, a theory of constraints, he explained to us. For the first 2 sessions, we were wondering where is it going, will it take us somewhere? And then suddenly it started to unfold. He realized that, or he made us realize that we were all our people, top 11 people in the room. He made us realize that even our goals and objectives were not aligned. Every person had a view of what he was doing as a part of his job. Nobody was thinking in one direction about taking the company to a level where shareholders' mandate would be met, regulators' mandate would be met, and customers would be satisfied. So after much debate and research, we finalized or honed in on one single parameter that would be the key driver for each person's actions that he does as part of his functional responsibility, and that was return on embedded value. And it was a long exercise. I remember it sort of extended over 4 or 5 sessions to discover that this is one parameter. If we follow the top 11 people, we will be able to take the company significantly growth-oriented direction rather than just thinking of our own functions and working in silos. Return on embedded value is nothing but what we call as return on net worth. And embedded value is a function of the book that you have created plus the net worth that you have. In very simple terms, not simplistic, I would call it return on net worth. That having been decided, the next challenge was, how do we take it to the ground? I showed you 2,800 employees and most of them on the branch front handling customers with their agents. How would you understand a complex parameter like return on embedded value, and what are the various parameters that contribute to growth in return on embedded value? So there was another exercise, a long drawn exercise to find out a very simple version of the return on embedded value, which we termed as contributed value, where we told our and my colleagues from manufacturing sector already have done this in their fields. We told them very clearly that if you sell a product with a tenure of these many years and between traditional and non-traditional, these are the 3 products which will give you the highest contributed value. We will reward you in a different way than if you were to sell a less margin product. They understood, but it took them 12 months. Having gone through that journey, I find it sometimes very difficult to believe that we were able to pull it off. Create a, common agenda at the top, and for every leader in the head office to push that agenda on the ground in a similar way was, I think, the biggest win that we were able to manage. The results, as I said, in 16-17, that's when Mr. Gilani met us. Last year we were, after implementation of all the outcomes that we discovered went through the journey of implementing TOC in the company. We were the fastest growing company in the industry last year, not just in top line but also in bottom line. Despite significant investments that we made on technology, on systems, on new offices, branches, our cost to premium ratio remained flat at 43%. We improved our claim payment ratio and we are now among the leaders in the industry at 97%. And 13-month persistency, which is a barometer of quality, we took it to 80%, which is the fourth quartile of the industry rankings. So, outcome is visible today. We have moved to the 9th rank in the industry, and we have aspiration, as Mr. Gilani says, to move up. But I can't commit. I'm sorry, sir. That number 4 or something like this. The fact being that at some stage you realize that you're creating maximum value from what you're doing. Going beyond that and start destroying that value as well. So Mr. Gilani and I, we keep having those debates about some of his philosophical issues, and I keep telling him that you have in your assignments worked many times with promoters I'm a CEO and MD and I'm not a promoter. I have to ensure that my employees, my customers also get the same kind of attention that my promoters' interests get in my this thing. So in pursuit of higher rankings without a large bank to support you, we believe we will be destroying value or we will be compromising on customer propositions. So that's our story. And Mr. Gilani says make more and more money. So I decided that I will bill Mr. Gilani today for my visit, or he will exchange one day